Hey guys, welcome back to Rivian Updates. My name is Isaiah. Rivian CEO and founder RJ Scaringe joined Bloomberg TV's Emily Chang on a full 20-minute interview during Bloomberg's technology conference. And they talked about everything from Donald Trump versus Elon Musk, Slate, the stock price. There is so much to talk about. So I thought, why don't we turn this into a reaction video of sorts? Now, I want to preface and say I am not a stock or financial page. I am purely interested in Rivian, and alongside Rivian comes with the business side of things, their financials, what they're working on, and I am super intrigued. I've always been intrigued with the business side of things, and so I thought this interview would be a perfect placement on this channel, whether you are an investor or an owner, but I hope you enjoy. So let's kind of jump right in.
All right, so we've been talking backstage. As I mentioned, I have 4 kids, and I drive a minivan, and so we've been trying to be cooler, and my kids are all in on the Rivian. We've test driven the Rivian, but I haven't pulled the trigger yet, so maybe you'll convince me.
Help you out, yeah, we would love to.
The first time I saw a Rivian was the day Jeff Bezos launched into space. We were in Van Horn, Texas, and there was like a pack of Rivians in 2021. And you obviously have a partnership with Amazon. But talk to me about the journey sort of from then to now. You've got the SUV, the pickup, you've got the R2 and R3 coming out. Give us the roadmap.
Yes, we launched
Pun intended.
yeah, there you go. We launched our first product in 2021, and in 2021 with the flagship products R1T, R1S. And so I think you saw those right before we launched. We then launched a commercial van in partnership with Amazon. So if you see any of the electric vans driving around here, those are actually designed and built by us. And then we made a big update to the R1 platform last year where we redid all the network architecture, the ECU topology, massive rebuild of our perception stack, a lot more compute. But what we're most excited about right now is we're about to launch a product we call R2. And it precedes a product we call R3. But the R2, R3 sibling combination is a set of much lower priced vehicles, with R2 being a 5-passenger SUV and then R3 being more of a crossover. But I've never been as excited as I am about a product as I feel about this vehicle with R2. It is so cool, the combination of packaging, the look, the performance, the capability. So if you don't buy an R1, I have to get you in an R2.
I feel like we live in like an increasing Rivian land. You know, I live in the East Bay and the North. Rivians are everywhere. They're all over Tahoe. How much is it really picking up in, Middle America, in Texas? Like, how are you going to get folks to, not buy the Ford F-150 and buy the Rivian?
Yeah, I mean, we're certainly in the Bay Area or in Southern California or Seattle. You see Rivians everywhere, which is awesome. My kids and I used to, on the drive to school, they would count how many Rivians they saw. It's like a 10-mile drive. And so 2 years ago, you would count a few. And now it's sort of like 22, 23. So it's been really remarkable seeing that. But, as we look across the U.S., the adoption has been strong. So it really scales with population. So big cities like Chicago or, you mentioned Texas, Austin, Houston, Dallas. These are also really big markets for us. And what's been amazing and was the goal was that the Rivian brand and, of course, the product is connecting with, non-EV buyers. It's pulling, most of our customers have never owned an EV before, and it's pulling people in that come.
I'm not going to constantly pause, but I will say, I think the last statistic that they brought, it was some like 70-80% of Rivian buyers were first-time EV owners. I'll say, I don't live in an affluent area at all, and there are now 4 or 5 Rivians in the area. It's kind of crazy because I'll be driving around and I'll see another Rivian, and I'm like, whoa, there's another one over here. But they're coming ever so increasingly popular, and especially when I go down to Orlando, they are absolutely everywhere. But sometimes I still feel like not enough. I see so many Model S's and X's, and of course those have been in production for a decade at this point. But I'll see a million Lucys. I'm like, where are all the Rivians at? But yeah.
Come from a broad spectrum of backgrounds. Importantly, we have Republicans that love Rivians. We have Democrats that love Rivians. And the consistency of how we've messaged our brand, messaged what we stand for, this idea of the products both enabling and inspiring people to go, to go skiing, to go do the kinds of things you want to take photographs of, has really connected with a broad cross-section of the United States.
What do you think of the folks who have those bumper stickers on their Teslas who say, I bought this before Elon went crazy? Has that been helpful to you?
We certainly see some more of those. I saw a sticker there that says, I identify as a Rivian. Which is funny.
That's good. Well, I was planning to ask you how you felt about your competitor being so close to the president, but over the last 24, 48 hours, I feel like I need to be asking, what do you think about the Elon-Trump breakup? Is that, good for you?
I don't know. Yeah, it's, oh, geez.
You can tell RJ's is not used to being asked questions like this. And it's kind of funny having his, reaction, because he clearly was not prepared to answer Trump-Elon questions. but it's fun.
Yeah, that's a good one.
Really, though, I mean...
It's dynamic, let's say that.
It's dynamic.
Yeah, it looks, it's interesting.
He's certainly been lobbying for certain things like rolling back credits and loans that actually would be really important to you. You're building new plants.
Yeah.
I mean, how are you liaising with the Trump administration? And are you at all concerned about the things that he has been pushing for? Or maybe less concerned?
Yeah, it's a fun question. We, when we take a big step back and you look at what the administration is pushing for, I think it's easy to get caught into the day-to-day of which tariffs are moving, which way, and some of the language that's used around electric vehicles. But really, the administration wants to see investment in U.S. technology, investment in U.S. jobs. And so we have more than 15,000 employees in the United States. We highly vertically integrated. We built a technology stack that's world-class. In fact, that technology stack on the software and electronic side underpins a $5.8 billion software licensing deal that we did with Volkswagen last year. So I think it's the largest software licensing deal in the history of the automotive industry. And then we're building our products, including all the components that go into them, here in the United States. We have a plant in Illinois now, and as you said, we're building a very large production facility in Georgia, which is a swing state. So I think that, certainly, I think there's some changes around like incentives for consumers that, are not great in the short term, but in the long term, you're building a U.S. company, building U.S. technology, and that's consistent. So in all of our discussions with the administration, we try to focus on that part of it.
Now, I hate to get political, but I do find it interesting how Donald Trump and Joe Biden, when it comes to this big, beautiful bill and the tariffs and pretty much decentivizing the purchase of foreign manufactured goods and services, versus the Inflation Reduction Act, which incentivized the purchase of domestic goods and production. And that's two sides of the same coin, but I think it's kind of weird how right now the goal isn't to get people to purchase something domestically. It's just to make sure that they don't buy something that was foreign made, which I think is the wrong way to do that. I mean, every other country, incentives are the way things work, right? Trying to decentivize something, especially when the supply chain is not built for that yet, kind of doesn't make any sense, right? Rather, incentivizing companies to produce domestically or do whatever you want them to do just seems like the better choice. I mean, that's how you get Rivian to build a factory in Georgia. That's how you get Honda Kia to build a factory, 2 factories in Georgia. That's how you get Polestar, Volvo to build a factory in South Carolina. That's how you get, Ford and Honda and Nissan to continue to invest in domestic production. But they're not going to continue to invest in domestic production if they're going to get away with just where they are now, and you're just going to make it harder for the competitors, if that makes sense. You should really strengthen domestic production instead of trying to weaken foreign production. Hopefully that makes sense.
Rivian had the hottest IPO of the year a few years back. The stock hasn't returned to that sort of initial glory. Are you annoyed that Rivian doesn't trade like a tech company, but Tesla does?
Yeah, I think for us, we went public. And immediately following our IPO, we had the big challenge of a supply chain crisis. Our ramp didn't go as quickly as we'd hoped. And there's been a lot of focus on the much shorter term from investors around what's our path to profitability, what's our path to positive free cash flow. And so in the last 2 quarters, we've shown a lot of progress. So in Q1, we had $206 million of gross profit, positive gross profit, which is great. But I think demonstrating that the business can be self-propelling, it can fund itself through the profits of the products has been really important. But we've invested so much on the tech stack that I think this will really serve as a big unlock once some of the overhang of concerns around cash or profitability starts to disappear. And at the end of the day, the stock market's not always logical. It's incredibly volatile. But in the long term, it tends to get things right. So as long as we keep executing, you said it, but the products resonate extremely well with consumers. So the last 2 years in a row, Consumer Reports does this brand survey. This isn't us, this is Consumer Reports. And they look at brand satisfaction, and we've been by far the highest level of brand satisfaction amongst any car company for the last 2 years in a row by a significant amount, with the highest rate of repurchase by 15%. So we love that. We have the market share leading product with the R1S. It's about 35% market share in its category. So if we can take that brand success, that market share that we have, and translate that to a much bigger market with R2, continue to invest in our technology stack. We have a huge amount of focus on software, autonomy, AI. The rest will take care of itself. It may just take a little longer than we'd like, though.
Tariffs have been especially hard for hardware builders.
Yeah.
How have they impacted you? What does it mean for example, your partnership with Volkswagen, your plans for the European market?
Yeah, I mean, the tariffs have been, in the long list of things I didn't expect to have happen, we have a daily stand-up meeting that looks at what changed in the last 24 hours around trade. And so, it's one of the things I say a lot is like when we think about trade and tariffs, I think often like we take almost an academic, like the world seems to take an academic economist view of what the economy looks like, which is, we're trading t-shirts and coffee cups. Like it's a really simple economy and production locations are really fungible and you can move things around really easily. But in really complex products, and in particular products that have these deep, long supply chains, like aerospace, like automotive, you can't move supply chains that quickly. And so for us, the challenge with the tariffs is we understand the intent of more content being produced in the US, but it's not something we can flip immediately. And so we have hundreds of suppliers who in turn have thousands of suppliers. Like take a headlight. A headlight looks like it's simple. We buy a headlight from a US supplier, but it has 5 tiers of suppliers with about 70 companies that participate in making that headlight. Much of the content comes from all over the world. So these are just really complex changes that are going to take months or years to implement production locations that reflect the policy.
Exactly. That's exactly how I feel. I try to put this in the most simple example, like this stainless steel, I think it's stainless steel cup here, right? This might be American steel, and the stamp and press might be American, but a certain component on that American press might be Indian or Chinese, or a certain container that American press is using might be Russian or I don't know, South African, whatever. When you have such a tiered supply chain where just the tiniest component comes from somewhere else, different location, wherever. And while the whole product itself might be American, right, the process to build this takes a million other steps. And within those steps, there are other countries involved. And so just switching a supply chain like that it's not that simple. That being said, again, I think just incentivizing the production of goods in the United States versus decentivizing it outside of the United States just doesn't make sense, because then you are then hurting American companies who then have foreign production, have tiered suppliers that are using for foreign production, instead of just trying to help and benefit the companies that are using American suppliers and have domestic production.
The price point is still high for average people. Like, what are you doing to bring the cost down, but still, keep the safety standards, keep the quality standards?
Yeah, so our R1s, that's the R1S, the R1T, that's our flagship product. The average sale price of this is about $90,000. What we're launching with R2, it starts at $45,000. So this, again, it's a big market expander. The average price of a new car in the United States is around $49,000. And so with R2 coming in, starting at $45,000 and having a few different trims across that price.
I'm sorry, I'm going to continue to pause. Previously, the average selling price of a Rivian was like high 70s, low 80s. But with the introduction of the Tri-Max, you can clearly see that the price has, that average selling price has heavily increased. And then we're going to be getting the Quad very, very soon. MKBHD today posted on his Instagram story the back emblem of the R1T Quad and the interior. I think the Quad is around the corner. But yeah, that's just going to more steadily increase the average selling price, which just, of course, boosts Rivian's margins.
Price range puts us in a great spot to see a giant step in volume, which of course will be great for us as a business, but also really start to help us absorb some of the fixed costs of these very large engineering teams we built.
Charging anxiety is still very real. I felt it myself. We test drove it to Tahoe. And also EVs have become this political football, especially in this administration.
A little bit, yeah.
Why is this so hard? And how far off is just not having to worry about charging? Like, we don't think about gas.
Yeah.
Like, when will that be the case?
Yeah.
EVs?
If I were to go back in time, 5, maybe 6 years, I would have wrongly predicted there would have been more investment into charging infrastructure. And I would have said, if we were sitting here in 2018, I would have said, there's going to be a bunch of investment that's going to create charging such that charging is ubiquitous, it's everywhere. And fast forward over the last couple of years, we haven't seen that happen. And so we took the decision to build our own charging network. And so there's 2 charging networks in the United States that have uptime, meaning when you show up, the chargers are working, greater than 99%. One of those is Tesla, and that's by far the largest network. It's a great network. And the other is what we call our Rivian Adventure Network. Our Adventure Network is about 4% the size of Tesla's network, so we're still building it. But amazingly, we believe our network, along with Tesla's, will be the 2 largest charging networks in the United States. And that will take time to build out, but you're starting to see them. You're going to start to see a lot more Rivian charging stations here in the Bay Area, but they're growing across the whole U.S.
You obviously have this relationship with Amazon. I'd love to get an update on that. And I know you and Jeff Bezos personally kind of hatched this deal.
Yeah.
What's sort of the status of your relationship now that he's, moved on in a way?
Yeah.
And he's backing a new company called Slate Auto.
Yeah, so Amazon's our largest shareholder, and they're a really deep partner. I referenced it before. We build commercial vans, and Amazon's our primary customer for those commercial vans. And just to give some scale to this, Amazon runs the largest centrally managed electric fleet in the world. So there's tens of thousands of these. You'll see them all over the place here. And so to build that and to put in place charging infrastructure to change the way that they ran their fleet as rapidly as they have has been something that required us to really be close with the Amazon ops team. And so I couldn't be happier with the nature of that relationship, and we're excited about what's to come. We're going to continue scaling that. As it pertains to Jeff, I've known Jeff for a while. He's been a great advisor and a great friend to me. Obviously he built one of the largest businesses in the world, so it's been really helpful to some of the questions you asked, navigating some of the volatility in the market, and I think importantly navigating even things like share price and a phrase he uses all the time, which is you need to be comfortable being misunderstood. And so I look at our share price and we're really bullish on what we're building. We're really confident we're building. We do believe we're building a very large business that's going to produce many millions of cars. And it's okay that the market doesn't fully appreciate all the things we're doing today. But if we keep executing, we know it will.
So
that's been his guidance to me all along.
He's backing this company, Slate Auto. They're making a $20,000 electric pickup. Does he hedge?
Slate's price, that $20,000 price, is really heavily banked on the $7,500 tax credit. So really, it's a $27,500 truck, and that is a $7,500 tax credit, price reduction. And of course, the tax credit is now up front, and so there'd be a $20,000 price truck that Slate would sell you. But if that tax credit goes away, which it likely will, I think the $7,500 tax credit is going to see the end. It has already passed the House, the big, beautiful bill, as Trump calls it. It is now going through the Senate. I think that it's going to pass. And unless it has passed already, and I just have not been catching up with the news. And with that being said, right, mark January 1st, 2026, the $7,500 tax credit will be done, and Slate will be selling a $27,000 truck with manual windows and absolutely no software, no autonomy. And I get a lot of people might be interested in, the modularity and the simplicity of a truck like this, but the vast majority of buyers, particularly buyers who are in the sub $30,000 pricing category, they're not looking for a manual road. They want the most for the cheapest. Okay, you want the most for the cheapest, you get a Ford Maverick. Okay, that's going to be less, sub 30,000 starting price. All right, for way more features. And so I just don't think Slate will work at all. Again, it's rear row drive. It's poor range. I see people complain about the audio systems in the Rivian. Slate doesn't even have an audio system built in. You have to purchase that. And how much is that going to cost to install that? You buy that from Slate and then install it. Right? There's so many variables. And I just don't think it's going to work for Slate at all. But that's just me being, I think, objective and, trying to understand it from a business perspective. Truly from a more fun Isaiah perspective. No, I genuinely hope Slate makes it. Oh, it'd be so fun whipping around a wheel drive, truck and just kind of going crazy with it. I think that would be super, super fun. But practically, people in that pricing category, $30,000 for, or you have spent on a car, are you going to buy a Slate truck if you need a truck, or are you going to buy a Ford Maverick or something else? Hopefully that makes sense.
$20,000 electric pickup. Is he hedging his bets against you?
I don't think so. I think one of the things that happens as the tech world looks at the vehicle world, in tech, it's very often that you'll have one or two dominant players that emerge and control the entirety of a space or a segment. In automotive, it's very unlikely you'll have one or two car companies that dominate an entire market. Just to give this some scale, there's about 90 to 100 million cars sold every year. The largest car company in the world makes 10-ish million vehicles a year. And so we think there needs to be a handful of highly successful companies that are building many million units a year. And in the US, we have the extreme challenge that there's a lack of choice. So if you were to buy, I say this all the time, if you were to look to buy an electric vehicle at a price of under $50,000 today, you really don't have any choices. There's one really compelling set of choices with the Tesla Model 3, Model Y. Mm-hmm. And you see that manifest in they have extreme market share, 50-ish% market share. that's just a reflection of there's not very many other options. And so because of that, electrification adoption in the United States is really asymptoted at around 8%, because there's only so many customers that want that form factor, that look, that brand. And for us to go from 8% to 50 or 60 or 70, even given how compelling the Tesla products are, customers want choice. They want more things. So I think it's great that there's more choices coming. I hope some of the large incumbent car companies help make compelling products. And part of our Volkswagen deal was that, which we said we can take our tech stack and help the second largest car company in the world create more compelling products across different brands, Porsche, Audi, of course, Volkswagen. And so that's that's the way we look at it.
Full self-driving has made some advancements, especially more recently. You guys take a different approach than Tesla. Talk a little bit about that and just what the advent of AI potentially means for self-driving and car development in general.
Yeah, I mean, we could spend hours on this, so I'll be quick.
We have 2 minutes and 3 seconds.
I'll be very quick. Just in just a few seconds, if we look at what's happened in self-driving, there's really been two big phases of how we've looked at this from a technology point of view. So from, call it 2015 to maybe 2022, all the different self-driving efforts were essentially had a very similar architecture, which was a perception stack, so cameras and perhaps radars and LiDAR, but a perception stack that would identify and classify objects. Those objects that were identified and classified would then have vectors associated to them, so velocity, acceleration, X, Y, and Z. And then those objects, along with the vectors, would be handed to what we call a planner. And the planner is a rules-based environment that was written by software developers that defined the rules of the world, essentially how you behave and how the other things on the road might behave, what are the trajectories likely to be. And the planner would then come up with, using these rules, how the vehicle should operate. And so it was limited around how it was programmed, and it was limited by the perception stack that was feeding into it. What happened that completely threw out and made everything that happened prior to 2022 irrelevant is the introduction of transformers and the way we now look at AI. And so the approach that now is absolutely undoubtedly going to win is what you may often hear called an end-to-end approach, where you have still a perception stack, but that perception stack creates an early fused view of the world, meaning the cameras provide raw information, maybe there's radars, maybe there's LiDARs, but a perception stack feeds into an early fused version of the world that's looked at through the lens of a large parameter, like multi-billion parameter foundation model that is trained through the data coming off the vehicles and the drivers in the vehicles acting as a participant in that training. And so this new approach requires very different things from the AV, Autonomous Vehicle 1.0. It requires a really large data flywheel. So you need to have a deployed fleet. You need to completely vertically control the perception stack. You need tons of inference on the vehicle to be able to do this real-time decisioning. And then you need to have a way to move all this data off the vehicle and then process it with GPUs offline to create this large parameter model. So all that said, we recognized that change was happening. And so I talked about a Gen 1 vehicle, which we launched with in 2021. That was the rules-based approach. And we now have our Gen 2 vehicles, which launched last summer. And that's entirely designed around AI. And so we're just starting to see, in Rivian's case, the strength of this data flywheel and the features and the capability that are about to continue to roll out through updates with this really AI-centric approach it's just remarkable. And the speed of progress is night and day compared to when we were trying to do this with software developers in a rules-based environment.
So last quick question, even though we're officially out of time. The valley of death is this so-called gap between scaling and developing an expensive product and then actually selling it. And I try not to mention him too often, but it's really hard in a conversation with you not to mention Elon Musk. He has called getting through the valley of death and starting an electric car company like staring into the abyss and eating glass. He famously slept on the factory floor. What are you doing to get out of the valley of death?
Yeah.
Where are you sleeping personally? Yeah.
Depends. Yeah, I mean, look, starting a car company is really tough. It's not easy. It takes billions of dollars of capital. You need thousands of engineers. You have a really complex supply chain. You have to produce vehicles at very high levels of quality. And today we're producing about 50,000 cars a year. As you say, you're starting to see them on the roads. But for us, that really big step of volume comes with R2. Today we've just got to the place finally where we're producing a positive gross profit, which is awesome. But to see where we start to produce billions of dollars of free cash flow, it's a business that benefits from, or I shouldn't even say benefits, it's needed to have a high level of volume, especially when you have a high degree of vertical integration and a really large engineering team to develop all the technology. So the next year for us is a really critical year. I'd say it's the most exciting year since I started the company. And I can't wait to see even more Rivians on the road with the launch of R2.
Okay, so that was the full interview between Emily Chang and RJ Scaringe. I think a pretty interesting interview. On the point where we're talking about autonomy, I think in this most recent podcast, and I made a video about it on the Out of Spec Bits channel, but RJ said that Rivian is working on a point-to-point system when it comes to autonomy. And so a full self-driving, I guess Rivian's own take on full self-driving compared to like Tesla, right? You just get in your vehicle, put in an address when the car just goes. And, besides it just driver plus being on the highway, it would be something that works both in city, suburban, and highway driving. So that is pretty exciting to hear. Didn't reiterate that here, but of course talked about the end-to-end completion of AI being able to take the fleet data and complete a point-to-point system when it comes to driving and autonomy. With that being said, I'm more interested in what R2 has in store for Rivian, right? Rivian has a factory that's capable, once we get the general assembly of R2 fully built, that's currently in construction, but once that line goes online, Rivian will have a max capacity of 215,000 vehicles annually. Right now, as of this year, Rivian might be producing 40,000. And in previous years, 2024, 23, that was 50,000 vehicles annually. And so they are only using a quarter of previously a third of the total capacity of this factory. And so with scale, being able to utilize all of your hands on deck, all of your employees, all of the space in your factory, you're going to see a decrease in that cost per unit. Of course, to achieve that, R2 needs to be cost competitive. The contribution to make that vehicle in cost, right? The labor, the parts, all of that, all of those investments have to be cheaper per unit than that, right? Selling price of $45,000 starting price for the car to be profitable. And so I think Rivian will do it. I think mainly because Rivian has worked with suppliers, right? Being able to decrease the cost. A lot of suppliers, right? They're working with these companies that may not be around in the next 5 years. Imagine being a supplier for Fisker, for instance. And Fisker, right, we know went bankrupt. Well, if you're a supplier for a Fisker part and you're dedicating a part of your factory to produce, the door handle of a Fisker, and Fisker goes bankrupt, well, you're screwed because you now have a part of your factory that's being unutilized and underutilized, and that costs you money. And so what happens is suppliers, for a lot of these early companies, they end up charging more money per unit for things just to kind of hedge against the company going bankrupt or something going wrong. But now that Rivian's been here for quite some time, we see that they clearly have an outline and that they will get to the point of R2 that they can give them the deals that they're giving Volkswagen and Ford and Tesla and all of the other auto manufacturers who have also proof that they will be able to fully utilize the supplier and not leave them hanging. And so with that, right, fully utilizing the factory, cheaper supplier contracts, and Rivian's ability to actually manufacture a vehicle more efficiently that comes from, right, the amount of ECUs and wiring in the vehicle to how the motors are produced. We saw the change from the original motor in the Gen 1 quad, and then we saw that efficiency change to the dual motor. And then you see that in the Ascent motor that goes in the Tri-Max. And that same Ascent motor is going to be going in the Quad Max. And so all of these efficiencies in manufacturing and engineering and design are just going to translate into a better R2, a better vehicle, a cheaper vehicle that's just going to make Rivian money. My biggest concern is definitely R1. We see some macroeconomics affecting the automotive industry, but clearly demand for R1, is kind of leveling out. I mean, the vehicle is getting older in a sense, right? We're on Gen 2. Gen 2 is now, as of this week, 1 year old. But what I mean of that is, right, it's not like a new vehicle where there's peak interest and, right, you have a backlog of people who want to buy your vehicle. Now Rivian is chasing customers, okay? Now they're at a point where they got to have spaces, they got to have the service centers, they got to have the demo drives to be able to attract more people to customers. And this is something that RJ and the CFO, Claire McDonough, says pretty much every earnings call or conference call that they have, is that there is room for improvement when it comes to the marketing side of the business and that most people don't know what a Rivian is. Just in traffic today, I had someone look at me confused. What is your car? I was driving through the back cities, back towns of Florida. And I had tons of people like, what is that? Point being, a lot of people don't know what a Rivian is. And so whether they can afford it or not, brand awareness is important. And so, and that's going to translate for R2. So I would like to see people know what R1 is, because when people know what R1 is and they can afford R1, well, damn, they'll know what R2 is and they can probably afford a $45,000 car and they'll go to R2. That being the point. So I would like to see better marketing from Rivian. I'm not sure. Honestly, I say better marketing, but I don't know what better marketing would be. They have the online ads, web page ads, YouTube ads, billboards, collaborations. They're on TV shows. They had brand like TV show sponsorships. They were in this HBO show. They're in two different shows that I know of. But they're also in like TV shows like Bloomberg and MSNBC, right? RJ is talking, Wasim is talking, Claire is talking. And then they also do a ton of demo drives. As of the last year, Rivian has been heavy on doing in-person impromptu demo drives. So going in front of gyms and vineyards and, city events, all kinds of just these random places where there are tons of people, where people can just see a Rivian, jump in and drive and get butts and seats to get that experience. And so clearly Rivian is doing it. But what else could they be doing to help transform how people are perceiving Rivian and, how to kind of increase how many people are aware of Rivian? Hopefully that makes sense. Let me know down in the comments below what you think Rivian should do. Hi, it's me again. In fact, it's me again. Rivian's CEO RJ Scaringe actually joined Bloomberg Television in the morning to talk about other things in Rivian, particularly their spinoff also. So I thought this would be the perfect time to kind of watch and talk about that.
Start with RJ is there's a lot going on today. The bromance in the White House between Elon and Donald Trump. It seems like it's over, and it's not going well. So I'm just curious, have you been able to...
This guy, bro, why he smiled? He immediately smiled. You see this smile? Look at this.
Over.
It's over.
And it's not going well. So I'm just curious.
Anyway.
Have you been able to kind of win market share or anything as a result of kind of Elon's position at Doge? And I'm just curious how it might play out here.
Yeah, I mean, I think
the anti-Tesla mode.
Yeah, I think in general, it's the thing that's been surprising is just how politicized a lot of things become. So electric vehicles become politicized, specific brands within the electric vehicle space are politicized. And so what we've tried to do as a brand really focused on is to focus on what we stand for, the products, their attributes, and there's the famous Michael Jordan quote, which is, we have Republicans, he said, Republicans and Democrats both buy Nikes. And it's the same thing with Rivian. So
let me just say real quick, I would love to talk to RJ just for like a sit down, just for like 10 minutes. I want to know what his deal is on shoes. I'm not a shoe person. I have a collection assortment of shoes for different events, and from New Balances to Nikes to regular boots to Doc Martens, whatever. I have different shoes. That being said, this guy RJ wears a lot of Nikes and a lot of Nike SBs. Some of the most craziest, this has nothing to do with the company, by the way. I'm just being fun here. A lot of just the wackiest shoes. I've seen him in person, and it's these weird like boots, Nike boots. And I'm like, I just never asked him, and RJ, if you're watching this, reach out. Can I just talk to you about the shoes? What's going on in your head when you pick some of these crazy looking shoes? Not that your shoe game is trash. I'm not saying that. Just that it's unusual. It's not common. Therefore, I am intrigued.
I'll go to Rivian events. I was just in New York yesterday, and it's such a beautiful mix of backgrounds, perspectives, cultures that are drawn to what we're building as a brand.
Right.
And we're about to launch what we call our R2, which is a lower priced vehicle. It starts at $45,000. And that product will even, broaden the aperture even more. And so
I think what Carol's asking is if there's net positive effect for you from this environment on sales and pre-orders.
So
I think
that's what she was asking.
I think you'll benefit.
No offense, but you see, I said it earlier in this video. You can ask RJ a question like, hey, pick one, red or blue. And he's going to be like, I think the interesting part about picking colors, no, that's not what I asked you. Pick red or blue. finally, Ed Ludlow, shout out to him. Get RJ back on track. Let's answer the question.
From this environment,
the anti-Tesla movement, have you benefited from it?
I think there are a lot of customers who are looking for a brand that they want to connect with. So we're seeing that for sure.
I just think he doesn't want to create any tension. And it's been clear of that, right? Rivian and Tesla can coexist perfectly. There's a famous line that J. Cole says, right? They act like two legends cannot coexist. Sorry, I'm bringing more of the funny side of me out today. But that being said, right, you need multiple options for success, right? You don't get to see how good the Ioniq 5 is if there isn't a Mach-E, an ID4, and a Model Y. You don't get to admire the software of a Model Y if there isn't an ID4, a EV6, Ioniq 5, a Mustang Mach-E. Like, there needs to be options. And so the more options, the more people are intrigued, and it just increases and boosts awareness of each other brands, right? And so I just don't think he wants to try to create any animosity between Tesla and Rivian, because again, he's been very vocal. The Tesla Supercharging Network, I agree. I thank you, Tesla, so much, because at this point, when I'm driving between Tallahassee and Orlando, literally every single exit, I can just pull in and there's a Tesla Supercharger. I don't have to worry and look at the map and be worried. Like, if you drive a gas car, you could drive anywhere and there's a gas station. Right now it's getting to the point where I can pull in anywhere and there's an EV DC fast charging station and I can charge and I am happy. And part of that, again, Tesla, great. Software, Tesla, great. Making EVs more common, that's all Tesla. And so, trying not to create animosity between companies, especially when, honestly, I think Rivian is the biggest threat to Tesla as a company. R1S kills the Model X in sales. And again, that is a bit of a harsh statement because the Model X's sales haven't totally declined since the R1S has been, introduced. The R1S just sells more than the Model X, right? And so they can both be great products. Rivian and Tesla can both be great companies side by side. But yeah, Rivian and Tesla get compared so often, so I imagine RJ just tries to be nice. Anyway, you get the point.
Sort of on that, thinking about the politics of this rare earths, I mean, you and the team have been really clear that you've been working to educate the Trump administration when it comes to the complexities around processing rare earths here in the U.S. We did hear from the president earlier today after a call with President Xi Jinping. He said there should no longer be any questions respecting the complexity of rare earths products. Are you still concerned about accessibility to rare earths?
Well, first I'd say I appreciate that the administration recognizes this as an issue. That's important, and I think that we've done a lot of work and spent a lot of time with the administration on this topic. I think this is perhaps one of the biggest topics surrounding the trade tensions with China. It's well documented that a vast majority of the world's processing for these rare earth metals happens in China. So this is something that we're going to continue to be very focused on, continue to have concerns about until we start to see it really move.
What's your backup plan?
We have many backup plans.
If you can't get access to these rare earths for some reason over an extended period of time, which are essential in making EVs and batteries, what do you do?
So what we've done, what we've spent time on over the last several months is to build alternative supply chains, but they're not elegant because they're not set up for scale, and a lot of people beyond us are also trying to build these alternative supply chains. So I think the hope is that in the short to medium term we see this open back up, and I think in the long term we're probably going to see both investment into building rare earth capacity outside of China, and then innovation to remove rare earths from products. So if you take in an electric vehicle, the reason this is so important is the motors use permanent magnets, and the permanent magnets have rare earth metals, things like dysprosium, all those things on the periodic table that we forget they're on there. But those rare earth metals are needed in the magnets, but you can create an electromagnet to power the rotor. The rotor's the spinning part of the motor, but then you've got to get power to the rotor. So that you can do it with a brush, you can do it with induction. So it's a more complex motor product, but it does remove the complexity of global trade around rare earths.
But is that a little time away?
Yeah, it's not, okay. You can't flip your design overnight, but I would say I think a lot of the auto industry is going to start finding innovative ways that are perhaps maybe a little more expensive that reduce the reliance on rare earths.
People wonder how nimble you are, though. Like, do you remember when we first met 7 years ago, with respect, your suppliers really wouldn't engage with you because of scale.
Yeah.
So if you have had to pivot a little bit because of policy, particularly for planning for R2, have you been able to, A, get your suppliers to listen to you, and B, affect a change? What's changed?
I mean, we've talked about this a lot. I mean, our relationship with suppliers, the leverage we have with those suppliers is so much stronger today with R2 and what's to come than what we had, in 2019 or 2020, even 2018. But I'd say the thing that's really helpful for us in R2 is it's not as if this is a surprise. We saw, if you going into summer of last year, we saw some of these tensions already rising between the United States and China. And that was as we were planning for and sourcing R2. So we contemplated and in many ways anticipated a lot of these situations we're now dealing with in terms of tariffs, in terms of trade restrictions happening. So in the medium to long term, we're pretty well covered. In the short to medium term, if things get shut off, that's really challenging. And so that's where I think the rare earth challenge is, that if this happens where it's off, it just creates a lot of pressure on a very thin, non-China supply chain.
I still think there's a lot of interest in Rivian. What I hear is there's also a lot of interest in Orso, your Micromobility spin-off. Would you consider kind of de-risking yourselves a little bit by allowing outside investors to write you a check into that venture and get you some capital or de-risk your own balance sheet in that respect?
Yeah, so we spun this Micromobility portion of Rivian out, and we actually raised outside capital. So we brought $105 million in at the start of the year.
Which is from Eclipse.
Which is from Eclipse, exactly.
Right.
And so it's now independently financed from Rivian. And it's, it's a really exciting set of products. We're going to show those products in the fall.
But would the venture look at even further outside capital to get going a little bit?
We could, but we're really happy with where it is. It's exciting to build a new business with the strength of all the Rivian technologies and starting point.
I saved 30 seconds at the end to wrap up our show. With everything that's going on from the administration, kind of pushback, it feels like, against alternative energy and EVs, do you think it's a real setback, or things will keep moving? And forgive me, it's just about 30 seconds.
30 seconds. All right.
Go.
Look, I think there's a lot of noise in the short term, but the end state is still really clear. The world's going to electrify. We're going to move towards sustainable, carbon-neutral transportation. And the countries and the businesses that focus on the future state are the ones that are going to be participants in the long term. And so, we talk about this often with the administration, which is the importance of U.S. companies having technical leadership, production capacity around these areas, and make sure we're there.
And I touched on this earlier, but China, right, again, incentivizes their companies to make EVs, just in production as a whole, whether it's phones or batteries or cars, whatever it is, right? Like half the stuff in this room is made from some Chinese company. I'm looking at a bunch of DJI stuff over here, right? It's China. And how do they do that? They decrease the price of steel, aluminum. What is it called? What's the word for, all right, subsidizes. That's the word, right? China subsidizes the price of things like aluminum and steel, things that would go in a car, some of these rare earth metals that help a lot of these manufacturers, particularly electric vehicle auto manufacturers, produce better EVs, produce cheaper EVs quicker. And with that, you are seeing companies like Xiaomi, a phone company, produce a car and produce it quickly at a very competitive price. And the supply chain is on point. And now, at soon, we're seeing Xiaomi expand into Europe and Australia and into other markets. And that's a country that is supporting a technology that they see has a clear advantage over a previous technology. And then you look at the United States, on the other hand, right, where we have companies like Ford and GM and Stellantis, particularly Stellantis, that are slacking off, okay? They are not producing competitive cars in other foreign markets anymore. China is dominating. BYD is kicking their ass. And so, you see a company like General Motors where a lot of these, almost all of these auto manufacturers, except Tesla, have joint ventures with other domestic Chinese manufacturing companies, auto manufacturing companies, to produce cars in China. And none of them are selling as well as some of the domestic Chinese companies like BYD, like Xiaomi, like XPeng, like NIO, like Geely. And so, Mercedes, BMW, Volkswagen, Ford, GM, Stellantis, market share is falling. Chinese domestic car companies, their market share is steadily increasing. And it's not only increasing in China, it's increasing in other parts of the world. It's increasing. Chinese market share is increasing in Europe. It's increasing in Australia. It's increasing in Africa. It's increasing in South America. Who do you think is next? North America. The only reason that China hasn't totally dominated the United States is because of tariffs and our chicken taxes and our restrictions on having Chinese companies come to the United States, ship vehicles, or produce them domestically here. Because if they did, they would kill Ford and they would kill GM, not only in technology, but price and scale and just everything. And so, sure, we can let Ford and GM totally slack off and, not try to incentivize and subsidize them. Honestly, yeah, tax dollars subsidize them and push them to beat these Chinese companies. But instead, we can go la, 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 and we can block out the noise while every other country lets Chinese cars come into their countries, right, and sell. We're just going to ignore it. And we're going to say, no, you can't buy a Chinese car in the United States. You only got to buy an American car. And so what's going to happen is we're going to come into a future where you have these Chinese auto manufacturers. Let's say the big three ends up being NIO, XPeng, and Xiaomi, or BYD, NIO, and Xiaomi. And they're the big three now. And they're selling everywhere around the world. They are dominating. They are the new Honda, Toyota, Volkswagen. Right? They're selling everywhere. And then in the United States, it'll just be American. It'll just be Ford and our Stellantis and our GM and, our Rivians in a sense, but of course, Rivians scaling outwards. Point being, Ford, GM, they can't compete. And so instead of trying to incentivize them to help compete, we're instead just blocking out the noise. And I'm hoping I'm making sense here because what the long-term effect of this is, as I've just laid out, is that every other country is going to buy Chinese and America is just going to buy American. And we're going to have more expensive cars and more expensive products and not as much choice. And so if we instead actually, as today, kind of let China into the country and sell, it puts fire underneath Ford and GM's ass to be like, all right, you got to do better. You got to have a better supply chain. You got to start manufacturing better vehicles. You got to do better in software. Like everything has to be better. You got to compete with the Chinese now. Instead of waiting 20 years when it's imminent and China is already selling in Canada and Mexico. China's already in Mexico, mind you. BYD sells a ton of cars in Mexico already. Right? Soon they'll be coming to Canada. And then it'll just be the United States. And at that point, right, it'll be impossible for Ford and GM and these other U.S. auto manufacturers to leave the United States and sell cars elsewhere because they've lost all that market share and China's taken over and we've protected them. We've covered their ears and coddled them and say, no, we're going to make sure China doesn't come and get you. But China's already got them elsewhere. But yeah, hopefully that's a whole long rant. If you're still sticking in watching this video, thank you. Thank you very much. But yeah, this is RJ Scaringe on Bloomberg TV. I thought this was a pretty interesting video. Thank you guys so much for watching. My name is Isaiah. This is Rivian Updates, and I'll see you guys in the next one.